Today we're going to have a discussion about the safeguards in regards to reverse mortgages, because prior to 2013, they were pretty awful.
It's kind of like the Wild West.
It was kind of like the Wild West.
I mean, the loan programs were risky. The lenders offering them were shady. I mean, let's admit, they were just terrible.
Oh, yeah. We would not offer them. Clients would ask about them, and we would not offer them until they cleaned them up. And like we said, in 2013, HUD implemented the Reverse Mortgage Stabilization Act and implemented so many guidelines and protections for seniors.
So one of those safeguards that was put in place is independent counseling. Let's talk about that.
That's a big one. I think that's a smart one also, as far as the guidelines that went into place. Every applicant for a reverse mortgage is required to attend independent, third-party, HUD-approved counseling with a HUD-approved lender, where they learn about the program, they can ask questions, they can see if it's even the best thing for them. And that's good.
What's interesting is, as a loan officer, we can't even begin to process the application. We can't pull credit. We can't do any of that until they've met that first requirement of the independent counseling.
True. Even more so, from the date they complete their counseling, we have to wait 7 days before we can do any of that. It's good. It gives them time to learn about the program and even discuss with friends, their wise counsel, so they can make sure it's the right thing for them.
Right.
One of the things that they will learn about in counseling are the fees. It's kind of a big deal. Everyone wants to know about the fees involved with the loan. Fees on reverse mortgages are very regulated. They're capped. They're even audited.
So that limitation on fees, that's a great thing. But the one item that might be considered costly with some people is this FHA upfront insurance.
True. And on any other FHA loan, you have that upfront mortgage insurance, and that's what gives you the safeguards of an FHA loan, as far as protections if the property is upside down in value, things like that. And it's no different on a reverse mortgage. You still have that upfront FHA mortgage insurance of 2%. And that's the one item where people kind of sometimes think that reverse mortgages are more expensive, because on a standard on FHA loan, that 2% or that upfront mortgage insurance is financed in the loan, so you don't see it. But on a reverse mortgage, it's as a line item. So it's called out, you see it. But the point is, a reverse mortgage is no more expensive than a standard conventional FHA loan.
And that does not become an out-of-pocket expense for the borrower, even on a reverse mortgage. The other portion of it is standard title and escrow. True,
which are just like any other forward mortgage. Exactly that. There's really no difference. Yeah, and those fees are not paid out of pocket, as you said. They're deducted from the amount that they can draw or from their equity. So they don't pay anything out of pocket, even while they're doing a reverse mortgage.
Exactly. So there's another safeguard. It's called advanced disclosure. And basically, this is a document that will spell out all the fees and costs of the loan up front.
Kind of like what most people know of a good faith estimate. It's going to give you all the fees up front, and once they're disclosed, they're locked in. They can't be changed, which is great. You know what you got from the very beginning. Can't pull a fast one on you. Yeah.
And what about our most popular
Oh my
safeguard?
Goodness. The one we get asked most often is about changes in title, if you own the home, if the equity belongs to you, and all of those are protected now. Yeah.
I feel like I need to look into the camera and state it very clearly. As a homeowner, you remain on title and you retain ownership of your home for the lifetime.
That's a big one. A lot of time it comes up, the heirs have questions about that. Okay, what happens if mom and dad pass? Does the home just go to the bank? Because with the reverse mortgages of old, that was exactly the case. We kind of joked that when you signed that note, the bank basically owned your home, and they were kind enough
to let you. Can we say it together? The bank does not own your home.
Let's just
the bank does not own your home.
Yes, true. So all the equity still belongs to you, title, all of that is still in your name, even if you have a home, if your property is in your trust, it can remain in your trust. It's just like on any other forward conventional mortgage.
So yet another safeguard is no maturity date. I think in most people's mind, they think of a loan having a certain term, like a 30-year fixed. But with a reverse mortgage, it's different, right?
True. And this is the one, we keep saying how most reverse mortgage is almost exactly like a forward mortgage. Same protections in place, the things like that. But this is the one element that does need a little explaining, because exactly that. On a reverse mortgage, you don't have a set term. It's designed to be for the lifetime of the borrower. So you don't have a 30-year fixed or a 15-year fixed term, because you're not paying anything off. You're just using the equity in your home. So yeah, it's designed to be for the lifetime of the borrower.
And I do want to emphasize that this is a non-recourse loan, meaning the borrower is protected from unforeseen things that could happen in the future, like a housing crash. So this makes a reverse mortgage much safer than other loan options.
And the phrase that's often used is the borrower has a lifetime right to occupy that home. That kind of answers it right there. They have a lifetime right to occupy the home. Which brings us to prepayment penalties. Most people are familiar with what a prepayment penalty is. Reverse mortgages do not have prepayment penalties.
Say that 3 times fast. Which means you as the homeowner can sell or even refinance this loan at any time without being penalized.
Most people aren't aware that you can refinance a reverse mortgage if you decide to down the road.
Very true. Another great safeguard is kind of like a cooling off period that's built into this loan. Technically, it's known as a 3-day right of rescission.
True. So even after the borrowers sit down with the notary, sign all their loan documents, they still have 3 days after that if for some reason they're confused or they decide not to. I mean, usually with us, there's so much education that goes into place that they're anxious for it to fund. But they do have 3 days after signing the loan docs.
And they can cancel
reason.
at that point without being penalized.
No penalty, nothing. Right.
And it's also important to know that the bank will hold these funds until this 3-day right of rescission, so the funding doesn't happen until that 4th day.
True. We've been talking about so many safeguards and protections, and one of those is asset protection. On a reverse mortgage, it's not the individual or the borrower who's qualifying for this loan. The security on the loan is the property itself.
And this is often a concern of the heirs, so it's important to understand that all the parents' assets are protected, and the only collateral on this loan is the home itself.
And I think that's why so many financial planners and even wealthy individuals are considering reverse mortgages now and seeing the benefits of them, because they can use the equity in their home and everything else they have invested is protected.
That last thing you said, it's almost like a paradigm shift for financial planners. In fact, this is such an important topic that we're going to give an entire video to using a reverse mortgage to help bring longevity and security to your retirement.
As you can see, there are a lot of safeguards and protections in place for reverse mortgages. We could talk about them all day, and we like educating our clients, but one big one that we do want to still touch on is the protections for a surviving spouse. If you have a married couple, one passes, the surviving spouse has a lifetime right to occupy the home, and the same protections follow through to them.
We've covered a lot today, but if you still have questions, we'd love to chat with you. Give us a call. We're the Reverse Mortgage Group.